it's me, Buffy, and this is the first November episode of our weekly Market Insight series brought to you from the Capital Markets Trading Desk right here at SunWest Mortgage Company. We have had a week packed with economic data, so let's get to it. Stocks futures started the month of November on a positive streak as they bounced back from last week's oversell. Treasury yields are sliding down after spiking again at the beginning of the week. These moves come as markets were encouraged by Wednesday's Federal Reserve's decision. Investors are betting that the central bank could be done with raising rates for 2023. The market suffered heavy losses last week as many companies posted disappointing earnings reports. The S&P 500 had its third consecutive month of losses, its longest losing streak since March 2020, as geopolitical events, high interest rates, and economic uncertainty have led to investors having a guarded approach. The U.S. Treasury indicated it will sell $112 billion in long-term securities next week. The figure is slightly lower than the expected $114 billion, which might signal concern in the recent surge in yields. And on Wednesday, the Federal Reserve delivered a highly anticipated hold on benchmark interest rates, leaving them in the 5.25% to 5.5% range. This was the second straight month in which the central bank held interest rates unchanged after a string of 11 rate hikes. The decision included an upgrade in the committee's general assessment of the economy, even as the labor market and inflation remain above the Fed's target. The central bank indicated that the current tightened cycle has come very far, weighing on the economy, and that it will proceed carefully and remains committed to achieving its goal of reducing inflation back to 2%. The Fed also signaled that the recent spike in long-term Treasury yields reduces the need for rate hikes. According to the ADP National Employment Report, private sector payrolls rose by 113,000 in the month of October, pointing at a tight labor market. These figures are higher than September's 89,000, but were well below the expected 150,000 for the last month. On wages, ADP said pay was up 5.7% from a year ago, the smallest annual gain since October 2021, but the labor market JOLTS report showed that job openings increased by 56,000 to 9.553 million in the month of September. Layoffs for the month declined to 165,000, the lowest amount in 9 months. The labor market seemed to be cooling down as recurring and initial unemployment application figures came higher than expected. Continuing claims reached their highest level since April as they increased to 1.82 million for the week ending October 21st. Initial jobless claims rose by 217,000. The Bureau of Labor Statistics showed that U.S. employment costs unexpectedly quickened in the third quarter. The employment cost index increased 1.1% during the July to September period. It is up 4.3% on a yearly basis. While the home prices reached a new high in August after 7 straight months of gains. The U.S. August FHFA home price index increased by 0.9% on a month-over-month basis, higher than the estimate of 0.6%. On a year-over-year basis, prices nationally climbed 2.6% compared with a 1% gain in July. There are some expectations that high mortgage interest rates will bring down monthly gains during the winter month. In our weekly update, mortgage applications dropped for the third consecutive week. Applications were down 2.1% on the week ending October 27. Refinance applications were down 4% the previous week and 12% from the year before. Purchases were down 1% on a weekly basis and 22% compared to last year. And on to world news. The Bank of England left their benchmark interest rate unchanged at 5.25%, a 15-year high. Governor Andrew Bailey indicated that this restrictive policy could remain for an extended amount of time. The Bank of Japan has further relaxed its grip on government bond yields and long-term rates. The BOJ also decided to hold its position as the final global central bank with negative rates. Sorry to go, but that is all we have for you this week. Please hit the like button and to be notified every time we upload a new video, and to subscribe, just hit the notification bell, okay? Not gonna take much time, just pop and you're done. Thank you so much. Have a fantastic weekend. Buffy out.